Hi, welcome back. In this video, we are going to continue off on line 12, standard deductions and itemized deductions. All taxpayers are given a standard deduction that they can deduct from gross income to determine their taxable income. The standard deduction is adjusted each year with inflation. However, many taxpayers have another option. Instead of taking the standard deduction, they can itemize deductions. Itemizing deductions broadens the amount of deductions a taxpayer is allowed to deduct from their income before determining taxable income. We will again be looking at the taxpayer Emily Green. Emily wants to itemize deductions instead of taking the standard deduction. Because Emily wants to itemize deductions, we will need to fill out Schedule A. Going to Schedule A, we're going to start at line 1. Line 1 asks for medical and dental expenses. Emily has the following possible itemized deductions: insurance premiums for $1,250, copay for a doctor's visit for $40, fillings for her daughter's cavity for $160, over-the-counter shampoo to treat dandruff for $40, prescription medicine for $50. Any medical procedure, including surgery, doctor visits, tests, and therapy that is medically necessary for restoration of health is tax deductible. Anything cosmetic, over-the-counter, uncommon, or voluntary is generally not. Going through the list of her medical and dental expenses, most of them are deductible, though there's one expense which should stand out as non-deductible. Take a moment to think about what expense is non-deductible. If you thought that the non-deductible expense is the over-the-counter shampoo, you are correct. After totaling all of the expenses, besides for the over-the-counter shampoo, we get the amount of $1,500. On line 2, we enter the amount from 1040 line 11, which is adjusted income. A taxpayer can deduct medical expenses that exceed 7.5% of their gross income. So we're going to multiply Emily's adjusted gross income by 0.075, which is 7.5%, to get 7.5% of her income. We will then subtract 7.5% of her income from line 1. If line 3 is more than line 1, we will enter 0 on line 4. Line 3 here is more than line 1, so we enter 0. The next part of Schedule A is for taxes paid during the year. Line 5A is for state and local income taxes or general sales taxes. Line 5B is for state and local real estate taxes. Line 5C is for state and local personal property taxes. Line 5D is used to add up lines 5A, 5B, and 5C. Line 6 is used to report other taxes, such as generation skipping taxes imposed on distributions of income, or foreign taxes imposed by a foreign country or any of its political subdivisions. One of the most common taxes that taxpayers have here are personal property or real estate taxes and assessments imposed on their home and or their vehicles. Emily has personal property tax of $6,000, which is entered on line 5C. So we will add $6,000 to line 7. The next part of Schedule A is for interest paid. Line 8 is for home mortgage interest. Generally, home mortgage interest is any interest paid on a loan secured by the home, a main home or a second home, and can be deducted here. Keep in mind the TCJA, Tax Cuts and Jobs Act, reduced the debt principal limit on home mortgage acquisition indebtedness. Investment interest is interest paid on money borrowed that is allocable to property held for investment, from the prior $1 million threshold down to $750,000. Notably though, the lower debt limitation only applies to new mortgages taken out after December 15, 2017. Any existing mortgages retain their deductibility of interest on the first $1 million of debt principal. Line 9 is for investment interest. Personal interest, such as interest paid on credit cards and auto loans, is not deductible. She had $4,300 of home mortgage interest, so we enter that on line 8A. And she had no other interest paid, so the total on line 10 is just $4,300. The next part is for charitable contributions. Emily has the following possible itemized deductions. Charitable contributions of a $200 check to a war veteran organization, $300 check to a political candidate running for mayor, $150 fair market value of a desk donated to a qualifying organization, a $700 check to her niece for her to study abroad in the summer, and a $540 check to her friend to help cover the cost of rent. For line 11, we'll look at her charitable contributions. First, we have to see which were given by cash or check. We have 4 contributions which were given by check, though of these 4, only one qualifies. Political groups, candidates for public office, and tuition, which any type, either private, college, etc., does not qualify as a charitable contribution. Other organizations that do not qualify as charitable contributions include civic leagues, social and sport clubs, athletic tickets, labor unions, and chambers of commerce, or groups whose purpose is to lobby for law changes and donations to individuals. For line 12, we'll look at her donation, which was not cash or check. If an individual gives a charitable contribution, such as property, to a qualified organization, they can generally deduct the fair market value of the property at the time of the contribution. The fair market value of the desk she donated was $150, and so we're going to enter that here. She has no carryover from prior years, and the amount does not exceed 60% of her income. On line 14, we're going to total everything and enter $350. On line 15, casualty and theft losses can be deducted. The TCJA repealed the deduction for casualty and theft losses, except for losses incurred in presidentially declared disaster areas. A casualty is the damage, destruction, or loss of property resulting from a fire, storm, shipwreck, or other casualty or theft. On line 16, other itemized deductions are entered. Some other itemized deductions that are entered are gambling losses up to the amount of gambling winnings, impairment-related work expenses. For this one, if a taxpayer has a physical or mental disability, their ordinary and necessary business expenses in connection with their place of work that are necessary for them to be able to work can be deducted. On line 17, lines 4 through 16 are added up. The amount on line 4 was 0, so we will add $6,000 plus $4,300 plus $350, which equals $10,650. We will now go back to Form 1040 and see if it's beneficial for Emily to itemize her deductions. The standard deduction for her as a head of household filer is $19,400. So we see it's more beneficial for her to take the standard deduction instead of itemizing her deductions. We're going to enter the amount of $19,400 on line 12 of Form 1040. Keep in mind that a taxpayer has an option to itemize deductions, even if they're less than their standard deduction. So now we have learned how to take a standard and itemized deduction. Thank you for watching, and stay tuned for the next video where we will go over tax credits.